Hi folks, this is Paul Giantonio at ERA Statewide Realty. I'm the marketing director here, and I'm coming to you from my home office today, the day after Memorial Day 2018, and I said I have to make this video. I have to reach out and speak to people because as I was talking to some friends and acquaintances over the weekend during the long holiday weekend, it occurred to me that when folks aren't paying attention, things are going on in our market. We're in a very unique situation of what's going on in the housing market. We have, for the first time in a long time, we have interest rates going up and home prices rising both at the same time. Usually you'll see home prices rise when interest rates drop, or if the interest rates go up, you'll see prices drop. But we're in a unique situation where the price of a home is going up and your purchasing power is getting worse. So if you're sitting on the sidelines, if you've been waiting, if there's something that's keeping you from jumping into the water, I would tell you right now, it's real important for you to pay attention. I'll give you a real quick example. The first week of January 2018, 30-year fixed rates for mortgage interest were about 3.95%. At the end of last week, the average mortgage rate for 30-year fixed mortgage was 4.5%. Talking about 55 basis points. Well, folks, I'm going to be sending out a chart to you. If you just click on the link that's next to this video or under the video, where it analyzes buyers' purchasing power. It'll show you that for every 1% a mortgage rate goes up, your purchasing power drops by 10%. So just in the course of these 5 months of 2018, the average buyer's purchasing power dropped 5%. While they weren't paying attention, but not only did their purchasing power drop, the cost of the homes have continued to rise. We are in all-time lows as far as the amount of inventory we have to sell new buyers coming on the market. So the extra demand on the limited supply is driving values up. As interest rates are rising, it's costing more for the people to make those monthly payments. So you're getting hit with a double whammy. So listen, I'll give you an example. I have, from our good friends at Keeping Current Matters, which is a real estate industry real estate blog that I subscribe to. They send out daily blogs and create different charts for us to look at. They put together a chart where they looked at what Fannie Mae, the Mortgage Bankers Association, and the National Association of Realtors, what their forecasts were for interest rates, for the second quarter, third quarter, fourth quarter of 2018, and the first quarter of 2019. And so far they hit it right on the head. They projected the second quarter interest rates for 2018 to be 4.5, and darn it if that's not where they closed last week, at 4.5. They're projecting interest rates to be at 4.8% by the beginning of the first quarter next year of 2019. That's nearly a full basis point or a full interest rate, a full point up from the 3.95 we were at the beginning of the year. So as I said, it's a 10% drop in your purchasing power. So if you were able to finance $400,000 at a certain number, if your limit is at that number, you're only going to be able to finance $360,000. So with interest rates going up and prices going up, that $360,000 next year is not going to buy you what the $400,000 could buy you this year. So listen, there's a link right next to this video. Click on it, and I'll send you out this buyer's purchasing power chart, as well as the mortgage rate projections chart. You can have that. You can look at it. Also, there'll be information on how you can contact me. If you have any questions, feel free to reach out to me. I want to be your real estate advisor. And guys, if you're thinking about it, now may be the time to take action. Thanks for listening, and I'll be coming at you with information from time to time that I think that'll help you. Have a good evening.